Good afternoon. When they first asked me to moderate the session, and they told me the time, they said, sort of 20 past 3, my heart sank. This is the sleepy hour. You've all had, a good lunch. You've been here all day, and I'm sure, at least a third of you are beginning to nod off. But then they told me what the topic was and who the participants were, and I've got to say my spirits lifted immediately, because this is an incredibly exciting topic. It's something that touches on the lives of 2.5 billion people, and it's also, an incredible panel. You've already met Joyce. The other three that I'm about to introduce are also, it's just fantastic experts. What we bring together here, and I'm not going to go through in great detail what they've done, but just to say, all of them have combined this amazing combination of commercial work with voluntary work as well, and I've seen both sides of the whole kind of financial inclusion perspective. We've got Claire, who's done is doing the rollout for M-Pesa for Vodafone. We've got Ishmael, who I've known for some time, who founded World Remit, that has probably helped more poor people in the world migrants send money home than just about anyone else. And we've got Arjun, who is, I guess, the money man, who's been investing in all aspects of this. Now, you've had a bit of a background on sort of why this matters, but I guess the question I'm going to put to the panel to start off with is just, why now? We've been talking about the importance of financial inclusion for decades. In a lot of places, we haven't made much progress. Why is this the decade in which we can really start changing the lives of those 2.5 billion? Arjun.
Sure. I think there's a confluence of a number of factors that have come together in the last few years. I'm not going to go into the digital and mobile revolution, because I think we've been talking about that all day. But a couple of other things. What Joyce previewed for you, we've finally gotten to start thinking really about how people relate to money, right? And what they're doing with money. And that customer insight is really critical to trying and sort of formalizing and moving people out of informal cash economies. The second big trend, I'd say, is the growth of behavioral economics, because it's very easy for people to stay doing things in the old pattern, right? Cash works for people. It might be inefficient, it might not transcend space and time, it might be risky, but it's worked for generations. So how do you get that behavior to change, to adopt new technologies, new formal ways of doing things? And I think the third other sort of trend is this notion of user-centered design. So how do we design products and services not to say everybody needs a bank account, but it's actually, how do people use the money? How do they relate to the money? And how do we design a set of products and services that actually facilitate their transition from a cash informal economy into a more formal digital economy? I think those patterns, in addition to, I think, all of the trends around big data and social and mobile and cloud, really make this a very exciting time.
Yeah. Well, I mean, you've been seeing this playing out in terms of not just the way people are remitting, but also the way they're using mobile wallets. What's your sense?
I think what we see is what is possible now with new technologies. I think the GSMA report that was released last week told us that there are 300 million mobile money accounts. And in 16 countries of the 90 plus that have launched mobile money, they have more mobile accounts than bank accounts. So we see that opportunity, and that is before we've seen the explosion of smartphones in the developing countries. So that really shows us the opportunity now we have, which has never been possible. And we have now in some African countries that are getting closer to cashless economies, basically. We've never had anything like that before, countries which never had any banking services, so to speak.
And Claire, I mean, your firm, is the textbook model of what happened in Kenya, going from virtually no financial inclusion to what's it now, 80-90%. But at the same time, it hasn't quite rolled out. What's your sense as to how it rolls out elsewhere and what needs to push it?
I think we're seeing good signs in Africa. We're seeing some good signs in DRC Congo, for example, of the model sort of slowly picking up. But I think what it has taught us is that technology is important, and suddenly we wouldn't be there without the technology sort of behind it. But distribution is really where the investment needs to continue to go, so that we bridge more of these bridges between cash and electronic value. So we need to see more of that, and that's not always sort of easy to put in place. And then at the end, this is also about the business model. So we've really moved from a model with lots of sort of fixed costs to one where sort of the costs are variable and actually enable sort of a lower sort of cost-based structure, and therefore more people to come in. So we hope to see those two elements, distribution and sort of new business model, taking up elsewhere.
So if we go from what you were saying, which is really about the kind of distribution end of it, how to get sort of cash in and out of your phone, I guess, to what you've been doing, which is really the very back end of the kind of superhighway around which money moves. And I guess, where do you think the priorities ought to be in terms of investment and driving?
Oh, I actually think it has to be on both sides, but each one is heavily dependent on the other, right? Because we can build these amazing front ends that address very local needs and local conditions, but then they get stuck in just that community or within that geographic region if there's not enough infrastructure to let them leap the boundaries. And this has obviously been a big challenge for M-Pesa. How does M-Pesa leave Kenya and bring that amazing product to the rest of the world? So what we're looking at is trying to kind of be the supporting back end, and really, really back end, for everybody that's working on these fronts on the local level.
And Ishmael, I mean, you and other kind of firms in this remittance space have been disrupting some of the legacy players, and that's really about quite simple, just moving money from point A to point B. So how important is some of this kind of innovation that's going on in the back end to what you're trying to do? How much of the cost is in that?
I think in international remittances, the biggest challenge has always been the cash on both sides. The digital players like WorldRemit have addressed the cash in the send side, so we don't touch cash. That is possible now. I think the challenge has been on the receive side. I mean, when we launched 5 years ago, 100% of our transactions were cash pickup. Today, like Western Union and MoneyGram, today 70% of our transactions are digital in the receive side because of thanks to the likes of M-Pesa, which have enabled us to credit funds into an account. So I think still the challenge is how do we digitize the remaining cash pickup in the receive side? How do we make sure a recipient in a poor village doesn't need to travel to a bank branch in a main city? And I think that means still deepening the mobile money accounts. So we have 300 million mobile wallet accounts. We need 2.5 billion mobile wallets for us to completely change this into digital services.
And what are I'm going to push you a bit further on this, but what are the main barriers to that?
I think the banks are the biggest barriers. I think banks are complaining about the mobile wallets and claiming that these are not strictly complying with regulations. And particularly in Africa, banks are feel threatened, so they are actively lobbying politicians, particularly in Africa where you don't have registers who tell you who is talking to who. And I think that is, and effectively asking and saying that new barriers have to be erected to slow down the growth of mobile money. I think that is the biggest challenge we face, particularly in the developing countries.
Claire, one of the points that's often made about M-Pesa is that one of the reasons for its great success was that it kind of got in there ahead of the regulators, and by the time banking regulators woke up, there was this incredibly successful story, and they accepted it. I mean, how true is that? And when you're trying to grow in other parts, perhaps West Africa or other jurisdictions entirely, how much are banks or bank regulators in the way?
Well, I think the bank regulators actually need to be part of the equation, and we always spend lots of time working with them and actually making sure they understand sort of what we're doing and what's the game there. So in East Africa, in Kenya, in Tanzania as well, where mobile money, M-Pesa, and some of its competitors are also doing very well now, the regulators has been engaged from the start. Now in both countries, there are formal mobile payment and electronic money frameworks that apply to anyone who wants to come and play, whether this is a mobile operator, a bank, or any other type of entity. And we see a number of other countries, including on the western side of Africa or in other jurisdictions, we see regulators actually take the same leadership role. So at the beginning, it's true, some of them are sort of slightly cautious and wonder what this is all about and what it will mean for them. It's often easier to say no than to say yes, but we actually see some of them actually, and most of them now, agreeing to these new type of services to come out, and then maybe pilots to go, and then pilots being sort of officially sort of authorized, and then new regulation. So they're playing a role.
And just also to push you slightly further on that as well, how much of this is out of their hands? I mean, I spoke with a former central bank governor in India recently who was saying, would love to roll out financial inclusion, but if you look at the international regulation around knowing your customer, anti-money laundering and the like, sort of his hands are tied, and how much do you think the international community needs to do?
I actually would dispute this slightly, because I think all of the sort of central bank or financial services regulator are actually part of the institutions which are making this happen. There has been actually lots of progress made in India, actually one of the jurisdictions, including on know your customers and within sort of the FATF. So I think those standard setting bodies are paying more and more attention to the challenge on financial inclusion, simply because they know that the more funds and the more transactions go from cash to electronic sort of transaction, the easier it will be for them sort of to do their own job. So I would say they need to continue to be involved. Many of them have, and I think a few more can join.
I think I can add probably on the KYC element.
Sorry, KYC, know your customer.
Mobile operators know their customers better than banks. We work with banks and mobile wallets. I think we send more transactions to mobile wallets than any other company. We're doing tens of thousands of transactions a month. What we've seen is, we used to do cash pickup in Kenya before we connected to M-Pesa. We've seen fraud attempts just dropping when you send money to a wallet, because the mobile number is not only an account, it is a national insurance in places like Kenya. Your employer knows, your friends, relatives know, so they don't want to receive money from a stolen card. So the argument banks make about the fact that mobile operators don't know their customers is quite sort of baseless.
Yeah. Arjuna, you're investing and have portfolio companies sort of up and down this whole sort of chain. Where do you think both the big opportunities are as well as the big challenges?
So I think a lot of our investments are all customer facing, and here are the big challenges we see, right? You need to drop the cost of distribution. Reaching that $2.5 billion underbanked will require very, very different economics for last mile financial services distribution, driven by ideas like what Claire has built at M-Pesa. So we're investing heavily in that layer. I think once you get past that, what you need to do is figure out the cost of identification, verification, risk assessment, and better targeting. Think about, this is a population that does not have a FICO score, right? How do you understand these people? What's interesting is we're at a point in time where everybody has some sort of digital footprint, be it a cell phone call record, a social media account. So you're starting to see this whole big data explosion starting to really dive into that sort of richness of information to try and understand customers and help you risk assess them better. Once those basic pieces are in place, then how do you ride the rails of that infrastructure to bring people truly insurance, savings, credit, personal wealth management, transfers, remittances, right? That's the world we want to bring, is this whole financial inclusion suite. But you need to fix some of the infrastructure layers, and I think Joyce goes one level deeper, which is really how do you connect the plumbing of this financial infrastructure. But I think up and down this chain, you're seeing some of the themes around digital, mobile, social, and then this user-centric design come up with a lot of really clever entrepreneurs building businesses around this.
And coming back to you and I guess the plumbing, I had two questions. The one is just,
I'm the plumber of the panel. So.
there we go. Exactly. So how much cost is there to take out of that? I mean, it feels to me that if you're talking about, having people kind of putting money in and out and all of that, it's, shaving, a few basis points off the cost of moving money around the world.
Well, there's the cost of moving money, but there's the cost of the interoperability, right? When anybody wants to expand into another currency or expand into another country, there's a huge amount of work and investment that goes into that. And one of the things that we're focusing on is creating a system that allows everything to be as globally interoperable and as voluntarily interoperable as the internet is today, right? So if you could imagine a financial system that was as distributed and as flexible as the internet is today, then a lot of these challenges that all of these companies in the room are facing with how do we expand to the next market become less of an issue. And the reality is that when we're talking to all the companies that are asking us questions, there are those that are, I mean, nobody's looking at just one market. If you're dealing with domestic payments, and even a developing world country, it's not purely a domestic market. You're looking at remittances. If you're in a developed country like the US or the UK, we do so much international business that there's no way you can create a financial system that doesn't look to cross borders.
And I guess, as part of what you're doing, how important are digital currencies? I mean, is Bitcoin part of the solution? Is anonymity that comes along with at least some of the cryptocurrencies part of the solution, or is that a bit of a red herring?
I think that all the digital currencies have been really interesting in that they've brought in a flood of new talent on the technical side that was not even in this space a few years ago. And when you look at what actually it does, I mean, Bitcoin solves the Federated Byzantine Agreement problem, right? And for most people in the room, it doesn't mean anything. For people in Silicon Valley, we're going bonkers over it. We're like, oh my God, this is like, the Big Bang all over again. So what it has done is it's brought new technologists to the field that are now looking at financial technology as a potential new breeding ground for ideas. So that's been useful. What will the role of digital currencies be in the future? I am probably a minority voice in the digital currency community when I believe that the future is probably closer to digitized versions of regular currency rather than pure Bitcoin or pure Litecoin or pure Stellar. That being said, there's a certain amount of benefits that can be derived from how Bitcoin has evolved, what people are attracted to that can be applied to regular currencies today.
And by digitized versions of regular currencies, do you mean the Bank of England saying, here is a digital pound?
That could be one example of it. I mean, on Stellar, for example, you can run a dollar or a euro or a pound on it as easily as you run as a Bitcoin, right? So it brings to every normal currency the benefits of digital currency. And with that comes the normal compliance that should attach to regular currency transactions. And that's one way of kind of taking a bit of the new, looking at people's existing use cases. Like the reality is poor people price their lives in their currency around them. We're not about to tell everybody, hey, price your milk in Bitcoin. I don't do that. Nobody else should really have to deal with that. So how do we actually take the benefits of the faster transactions and the kind of global interoperability of it and bring it to the pound?
And when you listen to this, to what extent does this promise to kind of complement your business or totally disrupt it? I mean, are people going to ditch M-Pesa or World Remit for a wallet that is moving virtual currencies without you as an intermediary?
Well, I very much imagine that this is going to be complementary. I think that we're indeed providing accounts and we help people move value around. And we, at the moment, we started domestically, then we actually also move on the international side and enabling indeed accounts to also receive money from abroad. Well, I could very well imagine that as digital currencies becoming more and more accepted, that we could also enable that. So I think that there's so many role that needs to be rethought, and we playing a small part of being this bridge between cash and electronic value. Then if there's suddenly a new currency that comes up, why not hosting it on our accounts as well?
So long as digital currencies are going through regulated entities, and so we don't get the association with the Silk Road time, which really damaged the whole digital currencies, then possibly there could be going forward. So a role for digital currencies.
But I actually get this question a lot from the banks. We're like, will digital currencies replace our entire business model? And that's actually not the way it always works. Like we have the internet and we have TCP/IP and we have SMTP for email, but I do not run my own email server. Right? I don't trust myself with my email. I don't even trust myself with my Bitcoins, right? Like I don't handle all of that myself. So what I do is I look for reputable organizations that have better security than I can provide for myself, even though I'm fairly technical. And I trust them because that's their business. So I think that in what this does is just evolves what the future business models look like so that it can really focus on provision of good services to consumers.
Yeah. How disruptive do you see all of this to both incumbent banking models as well as potentially to the disruptors themselves?
If you go back to it, right, a lot of Ismail's business is actually founded on trust. It's somebody who's working really hard, 10,000 miles away from home, and trusting Ismail to get his hard-earned money to the other end. That it gets converted into a set of bits and bytes that is really not part of their equation, really. It's, do I know that I'll get good customer service, and will somebody at the other end reliably have the cash to hand it to my relative, right? So we've got to really think about keeping that customer top of mind when we think about all of this disruption. It's not really the technology, and I think Claire made this point as well. So from our perspective, when we invest, we're actually looking for entrepreneurs who understand their customers, understand the pain points, don't see this as a glamorous tech business, but actually see it as a fundamental customer service business, building brand and building trust, and leveraging the power of technology that we have to actually, build an end-to-end service. Not directly answering your question as to the level of disruption. Yes, it's going to change things, but I think people still want. Money is fundamental, right? So they really want to make sure that they trust the person on the other side with their money, and that's really what we need to crack.
Yeah. We've been talking a lot about the business model, I guess less about the customers. I vaguely overheard a bit of a conversation over coffee earlier where I think you said when you opened up in, was it Iceland, one of your first remittances was to the Philippines. And that kind of struck me as just really interesting. What are some of the other kind of amazing anecdotes or examples that you've got from your businesses that have really given you an insight into the way in which people are interacting with their money, or insights into the world? The fact that the Philippines is such a globalized economy now with so many migrant workers. Any other sort of?
I know for us, we have a lot of millennial people in Indonesia that are that are using Stellar, and they kept just logging in and doing nothing, and we didn't know what was going on. Just log in day after day. So then we finally just, the fastest way to find out what they're doing is ask them, "What are you doing?" Turns out that most of our users had a Facebook account, they'd have a Twitter account, but they've never had an account that stores digital value. So they were logging in every day to make sure their money was still there. Is it safe? Yes, it's there. Is it safe? Yes, it's there. And it reminded me of when ATMs came out in Korea. We'd have these passbooks that we'd put into the ATMs that would print our deposit, and people just routinely would go in and check their balance and have it print out to make sure, is my money there? Yes, it is. And it's that building of the trust, transaction by transaction, that we thought was really interesting as we're kind of rolling out into these other economies.
Yeah. We've got about 3 minutes. Does anyone have any other great anecdote, or I'm going to go on to the sort of final question? But so the final question, I'm going to give you each a turn on this, and the rules are that you're not allowed to kind of talk your own book and talk about your company, but I want you to give me an example of what you think the most innovative, interesting financial inclusion kind of startup or business model or kind of tech innovation is out there at the moment, and we can start on that end.
Okay. And since I'm in London, I may as well talk about a homegrown innovation. It's a mathematics professor at the University of Oxford who basically built an algorithm that takes your cell phone usage data. So anybody living in remote Kenya with a $20 Nokia phone, the data that generates, they analyze this to give you a credit score. So credit scores were the purview of the top 20% of the developed markets. This now democratizes that by taking anybody with a regular cell phone and saying, I can give you a credit score. And it turns somebody from an anonymous individual to somebody who now is identifiable and scored, and you can actually reach out to them with formal financial services.
And is that being rolled out? Are you actually
It's being rolled out, and they're in partnerships with one of the world's biggest credit bureaus who found the technology to be transformative to their own business, and they're in partnership and rolling this out across the emerging markets.
Great. Ishmael, what's your?
I think to be probably one of the most successful innovations I've seen come from, in fact, Somaliland, where a telco launched what is now considered the most successful mobile wallet. And the way similar to M-Pesa, but what they've decided was that they would not charge domestic transfers. They would not charge merchanties. And so today, Somaliland is probably the closest economy to a cashless society. You can find in the capital city, Hargeisa, somebody who could tell you that they have not seen cash for 4 or 5 months. And largely, the success is because of the way the telco has built that. The fact that it's a testimony, they still make money, although they don't charge transactions going through, probably 60% of the GDP goes through the wallet.
Wow. I would give you more time. We're down to about 30 seconds. I'm going to...
So I think that I would say is
It's a great example. Claire,
So
in
something
15 seconds.
very simple. We've been approached lately by three young, I think, Swiss guys who've developed something called TawiPay, which is very basic. They review the retail prices of international money transfers. So I think they would look at what you're offering to your customers when they're sending to us or to others, and enabling sort of more transparency on the retail side, I think will help go a long way to reduce international money transfers.
Great. And
For me, I would say that one of the companies that I really admire is Paga, which I think is actually one of your investments. What I liked about them is that in fintech and in the fintech startup space, we tend to think we should focus on one thing and just do it narrowly, but the facts that we showed show that people use many, many financial services. So Paga actually bundles a bunch of services and offers them to merchants so that consumers can go to one place and get a savings account, get a place to send, do a number of things in one place. And just the ability to simplify takes a lot off of people's mental load.
thank you very much. I would like to ask you all to join me in thanking this panel for not just sharing their great insights and ideas, but also their best ideas.